This is our Forex blog for June 29th, and you can see the dollar and the yen were extremely weak today. The euro had bits of strength. The CAD was extremely strong, the Australian was strong, and the New Zealand was strong up until about 8. So basically you wanted to, until maybe about 8, trade the euro dollar, euro yen long. You want to buy the Australian dollar, Australian yen. You want to buy the CAD yen and sell the dollar CAD, and you want to buy the New Zealand dollar and New Zealand yen. So let's start with the euro dollar, which most people trade with. This one, was in an uptrend, and I've added our new FX and telestops onto this. In this move that broke out right here, it got you out somewhere in this zone right here. After this pullback, I believe it went long right here. Notice it got you out right at the top of that move for the most part. And this fib targets are pretty high probability places. Usually after a big move up, you want a deeper pullback or at least a double bottom like this. So you go long again, didn't really make much on that trade, broke out again, and it got you out again right near the top of the move. And for those who are selling at the upper containment band or the previous week's high, you can use that as a trailing stop on the way down. There was a lot of crazy volatility due to the Greek vote today. This is kind of an Elliott two-wave pullback, I think, very close to it. So anytime the market is in an uptrend and you get a nice move down and then another wave down right to the fib level, you could go long right when the trailing stop gets hit, or even when this bar here gets broken. And notice the trailing stop, took you all the way up until this price right here, around 44.20. That is a nice 55 pip move. These stops are extremely tight, but they also know when to be wider. If the market has extreme strength, then we have a wider stop. If that strength disappears or goes to weakness, we tighten the stop. If the market moves up statistically too much, we also tighten the stop, because usually you get a reversal, as you can see up here near the high. Went short, wrote it all the way down 30 pips. So we could have also traded the euro yen last night, again until the euro lost its strength. Notice, it went long right here. The trailing stop got you out, got you in again, made a small profit here, had a loss, got in here, small win, got in here, and it pretty much snagged every pip of this. I mean, it went up to 15 and you got out somewhere around 05. It caught every pip of that minus 10. And for those who are looking to do counter trend, once it flips up at a high probability reversal area near upper containment bands, you might use this to trade the opposite direction. And a lot of times when the trend's up and it flips, you get another move up, but it doesn't stop you out. This is a very high probability place, using the trailing stop right here to go short, just a few pips underneath it. If it closes above there, you lose 6 or 7 pips, and in this case, it came down. The trailing stop probably got hit right here. Hourly moving average is a phenomenal place to exit your trade at. And if you wanted to buy the low down here when it kind of went sideways for an hour, when it finally broke out, you're in, and notice the trailing stop got you out right here at 53. You might have gone long here at 06 for about 45 pip move. Let's look at the Australian yen. Now this was a pretty much no-brainer. The Australian was one of the strongest ones yesterday. You can see this breakout here. Trailing stop kept you in for the whole move. Anytime you see an astronomical move like that, you're typically going to either get a sideways action like you had here, or a little bit of a pullback. This was a pretty high probability trade today, starting the day off. It pulled back a decent amount, went sideways for 2.5 hours, broke out. You have a small profit here, you go long again here, nice 30 pip win that time, pulls back, and you're long on the breakout again. Another beautiful profit. Look how it got you out right here at the high at 08 versus 13. It caught every pip of that move minus 5 pips. And then on that pullback, you go long again, had a small win. When it gets up to the upper containment band, it's a pretty risky trade. Here you finally get a decent pullback. The IntelliTrend bars go from red to white, which means it's not weak, nor is it strong. The hourly moving average is a pretty high probability place to buy. You're in here, and it appears that it still hasn't gotten you out of that trade yet. You're still in it. The stop is right now around 21. You're long maybe here at, let's just round up to 80. You're up 40 or so pips. So the trailing stop makes it a lot easier to catch these moves. And just for comparison purposes, let's compare this to a standard chandelier stop, which we initially have a 3 times volatility stop in this as well. At these extremes, it got you out right here at around 06 or 07 versus down here at 99. So it caught another 8 pips. And you can see it tightens it up a lot faster. This one right here got out right here at 83 versus 73. That's an extra 10 pips. And if you're going to use it as an entry method, you get long right here versus right here. That's an extra few pips better entry, which adds to your profit. Let's look at the New Zealand yen. This one also had an explosive move up yesterday, and our trailing stop caught almost the entire move. Again, it went sideways for a couple hours. You might have started to look for buys, right here. Had a small win, went long again, small win, went long again here. Maybe a 15 pip win. And it's kind of risky to buy above the upper containment band. The Australian yen and New Zealand yen were just extremely strong, so you might have broken that rule today using these fib targets as your area. You're long again here. You can see the trailing stop got you out. And at that point, I wouldn't keep buying unless you got a deep pullback like this. But it went long here, and we're still in this trade right now. Anytime you get a pullback, when they're above the upper containment band, usually the hourly is a pretty decent place. You don't have to be anal about it. If the level's 03 and it goes down to 09, it's a few pips away, and goes sideways for half an hour, buy, and you're still in this trade. You might be long at 66.20. Your stops are around 45. You've locked in 25 pips so far, and it could very easily go back up and double top. You also should use some common sense. Most of the time when the market's double top or double bottom, they reverse. So this was a deep pullback. If it goes all the way back up to the high, don't let a trailing stop get you out. The odds are, if it goes back up to 66.72 here, that's the maximum move, and your stop might be 10, 15 pips below. Put those extra 10, 15 pips in your pocket. It might shoot up another 10, 15, 20 pips, but the odds are it's not going to. A CAD, very strong. So you want to sell the dollar CAD tonight. You can see also this moved down a lot. Some of the entries you could have had are when the narrow range breakout happened here. You had a 4-hour super narrow range pattern, and when it breaks out, you're short, very small profit. Short again here, small profit. Short again here, small profit. Short again here. You have a bunch of small profits until it finally broke the lows and just collapsed. And sometimes bars go down too far and we get you out of the stop. That's bound to happen. If the market moves statistically too far, which this one did, we super tighten the stop. So every once in a while, our tightening of the stops are going to get you out too soon. If you're in one of these that's just incredibly weak, you might want to just ignore the stops in certain circumstances. They're designed over hundreds and hundreds of trades to catch the most pips possible. But with everything that's been optimized, you're going to have occasional situations where the market moves down a lot and then snaps back up, gets you out of the trade when most manual traders would not have done so. CAD yen is also one that you would want to buy. Super strong CAD, weak yen. This one had major resistance right here, Fibonacci area. So I'm usually pretty cautious about buying right in front of that. But once it gets broken and can't get back down underneath it, from this point right here at 4 o'clock last night, very good high probability place to buy. You're long here around 82.70. Get you stopped out right here at 90 for about 20 pips. Kind of went sideways, no pullback, there's no weakness. You go long again, and it appears that it got you out somewhere up here because this was such a huge move that we super tightened the stop. 83.31 is approximately where you're out, and so in this case you made about 35 pips. And when it's way above the upper containment band, it's pretty risky to buy. In fact, you kind of want to wait for, you can see the extreme strength right here. As it's going up again, it's not nearly as strong. This is a divergence pattern. This is, when the market tries to go higher with less than half the strength it had before, it's usually going to fail. So you might have actually even, looked to short right here when it broke the trailing stop, short around 83.32, and it still appears to be short. Or, I'm sorry, I'm wrong about that. It got you out of this trade right here at 82.91. But that's an absolutely huge 35 pip counter trend move. And just like with the Australian yen and New Zealand yen, after this deep pullback, it found support at the hourly. You have the previous day's high right here, and you also have a Fibonacci area right here. There's major buy area right here. As soon as it starts to go back up again, you get long. And let's see if we got stopped out yet on this trade here. It looks like it happened, right up here, pretty much right almost near the top tick again, 83.32. You're long this probably around 93, and you made another 35 pips there. So you're going to have losing trades no matter what system you trade, but this keeps, like if you went short right here, notice where it got out right here. I mean, short here, out here, tiny losses. And this is a counter trend trade, so it's less likely to work, obviously. Going long right here, it got you out here with a big win. When it's above the upper containment band, it's pretty risky to buy, so you might want to kind of wait for the strength to end right here. It went up again, pulled back. You can see the strength is gone. You give it a shot short, you make that money. Now, after a decent pullback and finding support at a very likely area where there is buying, and there was buying today, or would have went lower, it continues trend. Pretty much a no-brainer. I think I went over everything. The pound earlier today had a lot of weakness. The Australian was strong and the New Zealand was strong. Let's end by looking at one of the pairs that very few of us trade, pound Australian. Weak pound, strong Australian. This would have been a phenomenal one to sell. You have a nice little pullback right here. Let's say you took every one of these trades. Short right here, lost. Short right here, and it rode it all the way down to actually somewhere around here, 51.21. So that's a 60 pip move. If you lost 8 pips or 10 pips and then lost another 8 pips and then make 60 pips, you've made money. Now at the lower containment band, it's less likely to go down. You might want to trade a little bit less lots down near the lower containment band. When you trade in the middle of the range, it's likely if the trend's going to continue to go down near the lower band. So you have very big potential profit targets. I always prefer a decent pullback too than selling at the lows. Obviously, if you sold right here, you made a little bit. If you sold right here, the trailing stop was right here. You made a little bit, 83, 15 pips or so. This one really didn't make any kind of a decent pullback, but even if you did sell right here around 75, you can see it got stopped out right here. After the spread in this, you lost money. Again, the farther down a currency is, the more likely it is to get some kind of a decent bounce, kind of like this would happen earlier. And after you get a decent bounce, it's a much safer, place to sell. I'm going to finish the blog today with an amazing use of trend lines. The euro-dollar nailed the trend line tonight, and it was pretty much the top tick of the euro. If you have a 30-minute chart or any longer-term chart on, and you draw trend lines off the lows, like this, right? You can duplicate that and plot it off the highs, and they don't have to perfectly touch every area. I think it was the euro-dollar that touched today. This previous area right here. I tried not to put them at the exact top because, the market really has to have an astronomical move. Might have been the euro yen that got hit. Let me try the euro yen here. I knew it was one of the euro pairs. I might be wrong about the one I chose. I had this on one of my charts and got an alert, and it was a pretty amazing trade. I thought it was the euro dollar, but maybe my charts are a little different at home. I don't know. One of these got hit. I'll, have to take a screenshot of the one at home. I don't know if I have different data set up or, eSignals changed their data after the fact. Who knows? Anyway.